Good morning. It is Friday, March 8th, 2024. I am Mark Sebastian, your only option, and this is Option Pit Live. Non-farm payrolls have just hit, and they've come in, pretty Goldilocks. February payrolls expected 200,000. The actual was 275,000, so that's hot. Initially, sounds bad, right? But unemployment rate ticks higher, 3.9%. And this is why markets are moving. Average hourly earnings only up 0.1% versus the expected 0.2%. On that move, futures were down a little bit. We're now up, trading up about 3 points. Nothing massive, but a nice move. NASDAQ futures up about 3 points. And VIX futures are pulling back. Obviously, the bond market is what everybody is paying attention to. The 10-year note did get a nice move on this. It's now up about 0.2%. The long bond, so that's the 30-year, up about 0.1%. So these are not exactly Goldilocks, but they don't appear to be market moving. And that is why, and that's why we're not getting a massive move one way or the other. If you are begging for a Fed rate cut, this probably plays a little bit toward the possibility of a June rate cut. Although I'm here to tell you, not going to happen. But that is the way, this is probably going to be perceived. So some pretty interesting news. Now, yesterday, we did have a whole host of earnings. Marvell Technologies reported down about 5.7% pre-market. The big one was AVGO, Broadcom. And Broadcom is down about 1% post earnings. Initially, it was down much more, but it's off a little bit on earnings. And then, MongoDB, MDB was another one. That one is getting smoked. It's down about 7%. We're really coming toward the end of the earnings season. These are probably the last several big, huge ones. And for the most part, yesterday earnings pretty disappointing. So today on OP Live, what are we going to talk about? We're going to hit on, we're going to talk about these non-farms a little more. We're going to be talking VIX, SPX, this crazy market. Our stock of the week is going to be a VIX ETP. We're going to look at some stocks we like. We're going to take a ride on Andrew's trading vehicle. And then I have some fun order flow analysis. All right. Now that we've got that out of the way, I hope you're having a wonderful day. If you got questions for us or you've got a comment about these non-farms, please let us know in the chat. We want to hear from you, and we are going to be monitoring and answering every question you have. So with that, let me bring in the Oracle of Options, the magnificent man of Maine, ye old ATG, Andrew T. Giovinazzi. Andrew, thank you for being here. Good to see you.
Today,
Happy Friday.
It is. You're going to you have a week off too, dude, next week.
I am going to be in California with my family next week. So Leisha will be hosting for me. Yep. She is going, I'm going to be visiting beautiful Mario World in Universal Studios. We're going to maybe go to La Brea Tar Pits, and then we're doing 2 days at Disney. Now, how many people have been to Disneyland? All right. 2 days at Disneyland. Hello, Don Rajic. Ken, good to see you. With everything in mind, do you know how much 2 days at Disney costs? I know I told you.
Okay, so when I was a kid, I'm just so you can see how old I am. $14. $14 for the day pass.
Add a couple of zeros, and that's how much it costs for 2 days. Now we're buying the fast passes and some of the stuff like that. So we're getting like the nice package to go in where you get to not wait in line all day, but it's still an arm and a leg to go visit our friends over at Walt Disneyland. Andrew, what's your initial but before we dig too deep into disflation, if you will.
All right.
Inflation, but disflation. What's your reaction to these non-farms? They seem pretty Goldilocks to me.
Yeah, I think you're right. I mean, we've had steady jobs increase basically since COVID ended, right? We canceled what 800 zillion jobs in 2 months, and we've been adding the jobs back now for I don't know 3.5 years. So, um, also, government is hiring too. I mean, the U.S. works until we screw it up, basically. So as of right now, I think these are all good things. It's just at some point we'll figure out what the job growth is costing spend wise. But for now, everybody's happy. So we're gonna go with the for now. Everybody's happy.
Yeah, well, that's for sure. We are sitting at all-time high. Futures are up about 5 points. Nasdaq's up marginally. Bonds are up marginally. So, all told, they kind of like the data.
Yep.
Fed payrolls were revised down. So that also is helping things down to about 225,000. So all in all, like we discussed, it is a bit of a Goldilocks report.
Yep.
Now, here we are at 740, and there is a strange happening in this market. And I know it's starting to make people nervous. We're sitting at an all-time high, and in the NASDAQ, in the S&P, in the Dow, these chip stocks are at an all-time high. Gold is breaking out. Every asset is strong.
It is.
It is.
I wonder
And
why.
Yet, we have the volatility index, and
I actually have a slide. Max has. If you put that VIX slide up for Mark, I think I know what you're going to say, Mark. I think I had a little idea. You see that little line there?
yes, I see the little line.
I think is that kind of what you were thinking, Mr. Sebastian?
I mean, the general VIX uptrend is what I was thinking, and the
Yeah.
fact that we're at an all-time high, and the low on the VIX, all right, was so the recent low of the VIX in the last, let's say, 3 months was on December 15th. And at the time, the S&P was $4,700.
Yeah, I know.
We're up almost 500 handles. We're up 10%. And the volatility index in that time, has gone from a closing low. Let's see, what was our closing low? Our closing low was actually December 12th over the last 3 months.
Yeah.
And that was a close of 1207. So implied volatility as expressed by the VIX is up 2 full points.
Yep.
And we have rallied 500 points. And folks, I'm not going to dig into the math too much, but without kind of getting too nerdy, the VIX is a mathematical formula,
Right.
It's constructed on a differential equation, and the math behind it basically states that if the market rallies, VIX should drop.
Yep.
All right. I'm not telling tales outside of school, right?
You are not, sir. Not at all.
Right. So the fact that we've rallied and that the VIX is up actually expresses a much larger increase in implied volatility than even the 2-point rally in the VIX. And that is kind of our topic du jour today, because that does not pass the smell test for this market. For me.
Yeah, it has it doesn't feel like a parabolic move, but it's like a sneaky parabolic move because we keep going. everything goes to the right side. Basically, you have a P&L graph. Right side is up, 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 up. So upside curve, meaning upside, SPX options. They just keep dragging the vol up, and there's no let up. So when Mark and I were liquidity providers, well, many moons ago, but when we were younger, and when you kind of have a one-way market, the way the liquidity provider deals is just by increasing vol, and that's what's making us nervous right here. Is it a money printing fueled rally? I don't know. All I know is we're going up, and we haven't been standing in the way of it, but it's definitely pulling the vol up. So, and it's because we're going in one direction and we don't stop. There's no pullbacks anywhere.
Well, and you've got kind of your call chasers back. I saw you posted on Twitter a thing about the fact that upside calls are popping, not in the SPX, but they're popping in equities too, right? NVIDIA, SMCI, and any notably in the chips, but in other areas as well. Upside calls are exploding higher, and that is caused by, I think some call chasing. So demand, right? Your FOMO, your YOLO people are all jumping on calls.
Your NVIDIA people.
But then there's also the asset manager that is using calls as a risk mitigation trade, right? I'm going to sell stock and I'm going to buy calls. Why do I buy calls when I think the stock market's topped out? The same reason Andrew and I aren't short, because it's going to keep going up until it doesn't.
Right. I agree. And plus you get, look at all the money they can take off the table, and they could still be in the game. There's a reason that option's level bull market. And this is why, you spend $3 on an option and you get leverage instead of spending a bunch of money on the stock or being able to take some money off. So it is a good plan if you want to do some risk mitigation. We spend a lot of time with students doing that same thing. So we talk about this all the time, but this is kind of it happening in real time, I think, too, Mark.
Yeah, it's really something fascinating to watch. But, historically, Andrew, when we see this type of behavior, how does it end? And in your 30 plus years of trading, do you see any parallels to the current market? Because I think that,
the obvious parallel is 2000. The difference between this market and that market was, most of these stocks are generating real earnings. The multiples are really high, but in 2000, people were buying internet stocks before there was any revenue at all. Right now, internet 2.0 with AI, it's mostly just all the money is going to one place, chip producer. So I think the biggest problem is the only things that people can identify really as the direct winners are some of the semiconductors that are making it. Google has rallied a little bit. Apple's doing nothing. Tesla hasn't participated. So it's a very narrow rally, and it's sucking up all the oxygen. And, and eventually, who knows where the stocks go? I think they're going to go higher until, it sounds dumb, but until they stop going higher. NVIDIA is too close to 1,000 not to get there at this point.
The daily 3-point rallies in NVIDIA is not natural or normal.
No.
It is. NVIDIA is not hard to borrow. So it's not like a straight up short squeeze, but it definitely has that feel, doesn't it?
Yeah.
Like I know this is, like heresy to say. I firmly believe we're going to have a 2 or 3 day period where NVIDIA drops $200-$300.
Could happen. Not today, though.
No, not today. Not today. But it will happen fast. I don't know exactly what will trigger it. But these types of one-way moves up 3-4%.
Right.
This is being driven electronically. Algos are pushing and pushing, trying to get everybody in, and then they will systematically pull the rug out. And this thing everybody panics. It drops $200-$300 over the course of 2 or 3 days. And then it becomes an opportunity to jump in and buy.
Right.
But everyone will be too afraid to buy.
Exactly. Well, it's like SMCI, right? It dropped to $700 and now it's $1,200 again.
Yeah,
Now
and
that's another
SMCI
one.
is going
Like,
to have
what if they announce a 10-for-1 split? Where does that stock go to?
gets
It's $1,500, right? Like,
yeah.
you
And,
remember
well,
when Tesla, when it was hot split? Like it's
oh
gonna
yeah.
it's gonna burn people's eyebrows off when it does it. So
But I'll tell you, SMCI probably has another giant drop coming its way. That one is tough to trade.
yeah.
And
I was looking at option premiums this Sunday. Everything's like 30
it's
bucks.
bananas. It's bananas.
If it ain't 30
But
bucks, it's 40 bucks or 50 bucks.
I mean, heading into today, like let's just look at Nvidia. Nvidia's $950 right now. You know the old saying: if it's trading 900, it's going to 1,000.
I know. I put that out. I put in the pro chat room. One of my students posted a really nice trade like 2 days ago. And as usual, I get busy, and I finally added one for my pro students yesterday. So I sucked along and bought a strangle too. I couldn't help it. The lean's a little long.
Well, Nvidia's up $25 heading into today. The at the money straddle was $25.
It's already going to be blown away.
All right. Now, the other piece that I think, and this is the piece that's strange, and it really started at the beginning of the year, at the top of this rally. And, we're looking at futures term structure. And VIX futures and the VIX are tied together, but there's usually a spread here. And VIX kind of slowly moves toward the VIX cash.
Yep.
Now, the March future doesn't expire till the 20th, so it has 12 days. It's trading approximately 0.3% above the VIX cash.
And
at
that's
this
mostly
period
today,
of time. What?
Right after the drop.
That's it, yeah. And normally this time, that spread would be about a point. It's been unusually tight for some time.
Mm-hmm.
And this formation says either VIX is going to get smoked or we are waiting for an event. And again, historically, when we see vol going up with the market, that sets up for an event.
Yep.
All right. It sounds like for an event. So Andrew, now that we've kind of talked about that, I want to hit on our stock of the week. Now, Alicia's out, so we can't have Judge, Jury, and Executioner. But
good, because I would hate to have to pick the long side of this one.
No, well, there's no long side. But I would never make anyone pick the long side of this. But today's stock of the week is the VIX products, notably UVIX.
Yep.
Now, explaining this one is a little different, but it starts with, and you're going to dig into this, I think, in a little bit.
A preview to the trading vehicle. Yes.
So UVIX is a vehicle that attempts to be long on a leveraged basis, a VIX future with a constant duration of 30 days. So so in order to do that, what they're constantly doing is selling the closer future they're holding and going back and buying. So what I want you to imagine, and this is why it is so terrible. All right. I'm going to cut this up for you. And what UVIX is doing. So the VIX futures are always heading. Thank you. I should have said, show my screen. I apologize. The VIX futures are always heading towards the VIX cash. All right. At expiration, the VIX future and the VIX cash should essentially be the same. There's a VRO where it's a little different, but for simplicity's sake, the moment a VIX future expires, it is VIX. Fair enough. I know it's not exactly true, but close enough for government work. Fair?
Yep.
All right. Now, between that, all right, at 30 days to expiration, it is the VIX future, the UVIX on a levered basis is holding entirely the March future. Then at 29 days, when that March future has 29 days to expire, it sells a little bit of its March and goes and buys April. Now, what I want you to think about is imagine a scenario where I put on a position at 1535, and over the course of 30 days, it is sliding toward 14. So every day, I'm selling a little bit of my VIX futures position at a loss. And then I'm reloading that same loser position up here. And once I put that on, it slowly slides toward that 30 days to expire. And guess what it starts doing?
And that loses.
Selling at a loss. Now, there are periods where vol can explode, and you can see UVIX go from the current. I mean, in theory, UVIX could go from the $10 it's at to $40, $50, $60, $80, $100.
Yep.
So in the very near term, UVIX is controlled by the VIX itself. But in the long term, UVIX outcome is entirely determined by what I just walked through. The VIX could go to 80 tomorrow, and in 2 years, I can guarantee you UVIX will be lower. It is going to zero. So that is the one piece.
Predictably crappy.
Yes. All right. Now I've kind of discussed that. How does, with this stock going to zero, right? It currently is $10. It started out, at when they initially listed it, I think it was 20. So It's been listed for 2 years. Andrew, has this only lost 50% in the last 2 years?
No, it actually does something magical.
All right. Well, Andrew, why don't you discuss the magic that is UVIX?
Yes, it manages to keep losing money. I'm not gonna. What's the right? Is it it's not a parabolic. It's a what's a line that keeps getting close to the edge? An asymptotic line, right? That continues to get close to an edge but never gets there.
Mm-hmm.
It just goes and goes and goes. And that's what UVIX does, because about every 6 months, 6 months to a year, right around there, it splits like around $8, $7. They split it. They reverse split it. So instead of the one share you have, you get a bunch more you get a bunch less shares at a higher price. So, if you do a 10-for-1 split, it's $6, it goes to 60, and then you have a fraction of the shares. So the underlying delivery is no longer 100 shares, it's a fraction of 100 shares. So it'll be like 10 shares.
The most famous reverse split that I can think of recently that made everybody that infuriated everybody was General Electric when they reverse split.
And literally, it's the only one that I can think of where the stock has gone up, and it's taken a while.
It has.
So eventually, UVIX will only have one share. Basically, you could think about it, you'll just keep getting less and less, and then eventually they're going to list a new UVIX product, I believe. Because I think when I looked at most of those products have a lifespan.
Yeah, they can reverse split this. Yeah, they'll reverse split it over and over again. So yeah, if you buy 100 shares, then on its first reverse split, when it gets to $8, you'll have 100 shares for $8. And then let's say they do a 10-for-1, you'll have 10 shares for $80. Then that $80 position that you own will go back to $8. They'll reverse split it again, and you'll have one share for $80.
Right.
And then it'll drop again, and then you'll have fractional shares.
Right. But they continue to list new options. So there's the stub on the old ratio. Mm-hmm. And then they're going to list new UVIX options that are 100 delta options on, 2 days after the split. So you're stuck in basically whatever the Roach Motel is that you have on the pre-split shares. And then you start over again. It's kind of like Christmas morning, 2 days after the split, because UVIX flies up and normally it just rots like crazy from the beginning. It can be a wonderful product. However, this year it did something a little surprising after the split. We had this October meltdown, I think, and it doubled.
Oh, yeah. We had a big vol event.
Yes, which is
And
even a better opportunity. So, when we talk about this at Option Pit, you have to be mindful of the fact that volatility can explode at any time. It's been a while though. I mean, that was our last event for
yeah,
what?
October.
What are
Yeah,
we? 4
it's
months in, 5
coming
months
because
in?
it is coming. And so kind of two takeaways for me, and Andrew's going to dig in a little bit more here in a second. The big takeaway is one, you can go long UVIX for an hour or maybe 1 or 2 days. But if you're long UVIX and it's been more than 72 hours, you got to ask yourself what you're doing.
You something has to be good. It has to be flying.
There is a scenario where you can go long UVIX. And if the scenario where it is okay to hold UVIX for longer than a day,
Do you need your screen up, Mark?
yeah, in 1 second.
Okay.
Is going to be a day like this, if you want to share my screen.
Oh,
so this is
good job.
This is the VIX curve called backwardation. If the curve is like this, then UVIX actually has positive decay. Now, that only happens about 10% of the time. But in this scenario, if you want to buy and hold UVIX for a couple of days, that can work. But again, even on these buy and holds, if we look at a chart of, at the time UVIX didn't exist, but we'll look at UVXY, which is kind of like UVIX's ugly, stupid cousin. And, you look at, here is 2020. All right.
Impressive chart.
Yeah. It split adjusted, UVXY went to 14,000. All right. Prior to the move, it was call it 1,200. So it gained 10x. And here we are 4 years later, and it's $7.
And that's why people trade it ultimately. They're looking for that, I think the market's going to zero, so they climb in.
Yeah. It's $7 from 14,000 4 years ago. Think about that wealth destruction. That's pretty impressive.
All right. Not many things have destroyed a market. Well, I guess inflation, but other than that, I guess UVIX is close, or UVXY is very close.
Well, speaking of destruction, you know what will never destroy? It's almost like it's almost like a Cybertruck. It's so impenetrable. It is a vehicle that will never let you down. It is the mode of transportation that everybody wants to take a ride in. It is Andrew's trading vehicle. All right, Andrew, take it away.
Why don't we start? I think, Max, can you start with the VIX chart real fast? I just want to do a couple of charts to just compare the two. So what we showed you earlier was VIX has been making basically higher lows since December, which is a little funky. And again, I think it's because the right side is pulling up too much, but it is troublesome. So I continue to kind of hedge as I stay long, is the easiest way I can say it. But the SPY is winning, so that's good. But you also notice that VIX does not move like the chart that Mark showed you of UVXY moves or UVIX moves, right? So VIX still has a cyclical, it's mostly a cyclical product, meaning it goes up, it goes down for a while, then it goes back up again. It's not going straight to zero. That's not the nature of how VIX is calculated. So VIX is a very range product, which makes it fun to trade, makes it very useful as a hedge, because you're always kind of bouncing off the 12 handle, right? So when you buy, let's say, a 14 or a 15 call, VIX is not going to go to zero. It's different than when you buy a SPY put and the market goes up, 50 points, your SPY put is toast. and it's totally almost out of range. So VIX still is a good hedge. If you want to use it as a hedging product, I think it makes a great hedge product as a contra side to something else. And we use it in products at OptionPit all the time. So that's sort of the nature of VIX, right? It's the fact that kind of more up and down. But UVIX, you could buy a call in UVIX, and you could switch to the next chart, Max, so people can get a little flavor of it. I mean, you can buy a chart and you could, all your call just goes, it'll behave somewhat like a put in the SPY, where because UVIX, is what it is, owns futures that keep decaying every day. It's like buying a decaying straddle almost, but the underlying doesn't move. So if you buy a call in UVIX, you could slide away. The futures can just decay away and decay away and decay away. And your call is so far out of the money that it really doesn't provide a hedge anymore. So that's why I think VIX is a superior hedging product. Maybe not the best product to get long, but it's a good hedging product. So I kind of use it like that way. And then you can hedge all kinds of other stuff with it. There's a bazillion things. Like a couple of weeks ago, I did like an SVIX Apple, like long SVIX, short Apple type trade. Worked pretty well. So you can use these products to hedge a long delta if you want. Now, let's go to my screen real fast while we only have a few more minutes. So what I want, hopefully you can read this okay. And I will try. I know I always fail here. View. Oh, no, I can do it right here. You're going to be proud of me, Max. There we go. A little bigger. So what I just want to compare a couple of things, UVIX versus VIX. So remember, UVIX is double long the VIX futures, and it owns the front two serial terms. Right now, it's March and April. And it's going to swing all the way to April by expiration. So when you're trading UVIX, you're buying both futures. So, and remember, the VIX futures will move independently to some degree, depending on what's going on with volatility in the S&P 500. VIX itself is the cash index with an expiration every Wednesday. And it's 30 days prior to the SPX expiration for the serial date. So it has a different expiration cycle than UVIX does. And it's important to know that. You don't want to be kind of caught up in something because, as Mark said, UVIX sometimes will be 100% one future or 50% one future. So if you think the volatility is going to move or something like that, but UVIX can be jammed up because half of the product owns a future that's essentially not moving, and then you have less performance out of UVIX. So you have to be kind of careful where you are in the 30-day cycle when you trade them. UVIX options settle to the UVIX underlying. So you could buy puts, take delivery of the shorts, stuff like that. You could do put rights, which are kind of fun to do. You buy a put and then you sell out of the money puts against it, if you want to be shorted. You can do stuff like that because you have the UVIX underlying. VIX is going to settle to cash every Wednesday morning. And as Mark said, VRO print is the settle, and you can do VRO as the symbol, and you can see where it settles every week. So it's a cash settlement. So right now, what I think, again, if I'm looking at how the market is going, what Mark was describing the futures is the March future is tight to April. So I wouldn't really trade this with UVIX or UVXY today. I would actually, and I'm going to do this actually, my trade would be I want to buy puts in March, but I'm going to buy calls in April VIX. I'm going to trade the two futures separately, thinking that because the April futures are relatively, I'm just going to call them low in price relative to VIX cash. I want to own those, and then I'll ride the March future down. And they will move separately relative. VIX will move, but the futures are going to move based on kind of how the forward vol trades, not exactly how the VIX trades. That's more just geeky crap that you don't. It's good you got to understand it eventually, but I know basically how that's going to work. So I'm looking for the spread to widen essentially. UVIX has lost 99% of value since inception, which Mark showed you. VIX trades in a range, doesn't go to zero. I think 897 is the lowest I've seen. It might be lower. And once or twice, it has traded 80, 100, close to there. Most of the time, it really trades in quartiles where half the action is below an 18 VIX, the other half is above an 18 VIX. Those are that's sort of the middle of how it trades. So it's a much more range-bound product, fun to trade when you understand how it works. I'm just giving you some high notes. Most of the time, again, as Mark explained, UVIX is going to decay in value because it owns VIX futures that decay in value most of the time. So the daily performance is pretty yucky for UVIX. That's a technical term. So if you own it, it's going to kind of die until volatility changes, right? Now, this is why people buy it at all. UVIX can explode higher when the VIX futures lift, right? And into backwardation, as Mark pointed out on that slide, that's really what makes UVIX fly. So all of a sudden, UVIX can be a phenomenal short-term long, okay? But it's very rare that it is, but it can be, just FYI. VIX explodes higher, and remember, it trades on the future of the term. So the March future is going to be relatively close to VIX right now, and then all the other futures are going to be kind of a function of the forward vol and some relative pricing on volatility and SPX. So they're going to move a little different. Generally, the 30-day serial future trades on a delta that gets closer to 100 as we get to expiration. So that's what I'm saying right now. If I'm trading this, the market looks okay, right? I think we see a 13 handle in volatility, possibly by expiration. So I'm going to buy some short-term puts in VIX, but I'll buy April calls in VIX to hedge. And I'm going to let the spread go out. It's not a beginning trade, but that's how I'm trading it today. Hopefully VIX doesn't crash before the open. Lastly here, UVIX will reverse split every 6 months to a year, generally. VIX does not split. It just lists new futures. So, every serial term, you get the weekly futures and then you get a serial term. So VIX and UVIX, while they trade the same thing, sort of, they are not the same product. And you want to understand how they work individually, and they're great products to trade. VIX makes a great hedging tool, but you should understand the nuance. I've kind of hit the high spots, I thought, but not anything. So my trading vehicle today will be VIX, short the March, long the April, looking for about $1 per contract, something like that, and looking for a double on my March contract. And there it is.
What a great vehicle
for my people today.
Thanks for the lift. All right, now I want to close out on just some quick order flow that I've been watching, and I was going to talk Rivian, but I'm changing up and I'm looking at SoFi. If you want to share my screen, because we're seeing some really interesting flow. And I know this is kind of hard to see, but I want to concentrate on this trade here. We've got a buyer of the March 22nd 8-9 call spread. They bought 25,000 of them. We've also got the March 8 calls, the March 22 8-9 call spread, another couple thousand here. That took place on Wednesday. Then yesterday, which is Thursday, March 7th, they put on a big bull risk reversal. So they've been buying and buying and buying. So they sold the May 6 put, bought the May 9, bought the 9 call, sold the May 10 calls to buy the 11 calls in August. We're seeing a lot of bull call action in SoFi. I look at the stock chart, and right now I don't see it, but I'm wondering whether this one is getting set up for some sort of pop, because since it basically bottomed on Wednesday, all they want to do is buy calls. So it's an interesting little one. Might be a fun short-term bull trade to buy some of the March 28th 7.5 calls. They're 48 cents. I think that with the way the flow is lining up today, I think a buy of those for 48 cents You wait a week, you're probably going to make between 50 and 100% on those calls. Real simple and easy trade. All right,
So
Andrew,
we're
up against it.
Yeah, we're done.
As we're closing out the show, S&P futures are up about 11. NASDAQ futures are up about 26. Bonds have backed off. They're now going toward flat on the day, the long bond, and the 10-year note it's the 10-year note still up, and VIX futures are still down about 20 cents. What's your take for how the day plays out?
I mean, how close are we to 5,200?
43 points with how much we're
I
up
don't
today.
think we hit it today, but I think we're gonna keep sort of lifting up. I think the State of the Union was like, I think performance was okay. It wasn't terrible. So like overall, people will be like, there's a little giddiness going on. And the numbers, okay, like you said, it's kind of Goldilocks-y, and Powell didn't ruin anything this week. So in general, when we've had that, Mark, what have we done?
Yeah, gone up.
We go up.
It's America. Stocks go up.
So for right now, stocks go up.
I got to tell you, I'm looking at this market. I'm looking at, these were good numbers, and the rally is still lackluster. I think we'll close up on the day, but don't be surprised that if some point we go red, and today's a bit of an inside day. An inside day meaning, we've been moving 40, 50, 60 points a day. Today feels like it's going to be a sub 20. That's my take. But
yeah, I think we will. Magic 52 today.
I think at one point we will go red. And if today is not an inside day, it will not be on a rally. That is my take. All right. Well, Andrew, we did it.
We did it without Leisha. Without Leisha, that's not as fun.
Despite Leisha-less, yes. We're Leisha Leslie-less. We still managed to get through the show.
We did.
I want to thank you for being here. I want to thank everybody for joining us. Reminder, we're here every Friday at 8:30 a.m. Eastern time to help you guide yourself through that day's trading and the week ahead. So for Andrew T. Giovinazzi, the Oracle of Options, the magnificent man of Maine, I am Mark Sebastian, your only option. This was Option Pit Live. Have a good one.
Have a good weekend, everybody. Thanks for coming in the chat.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.